close, I wanted to show a chart where Bitcoin actually broke its correlation with equities. This happened around the Silicon Valley Bank failure. The reason I want to end with this is because, from our perspective, this is very bullish. This actually is really for the first time that Bitcoin is starting to play out according to its original thesis, which is that there's this lack of trust in the fiat system. And in order for Bitcoin to be a hedge for the fiat system, there had to have been a break between equities and also DXY, which is a dollar index that we track. So selfishly, I would love to get your perspective on this. We feel this is one of the more bullish moments really of Bitcoin's history, was what happened back in March. Of course, price can do anything in the short term, but long term, we were waiting for this to happen because it shows that Bitcoin is starting to really truly be that hedge that lives up to this commodity idea, or this idea that it can be a store of value similar to gold. Would need to break away from equities and also DXY. So I would just love to hear from you. Do you think this is important? If not, why not? Or if you do feel it's important, what is going to be Bitcoin's big moment when Bitcoin's true purpose starts to play out?
No, look, I think it's incredibly important, and I think you're spot on again. Look, you said at the very beginning of the show, Bitcoin has been the best performing asset of all time. I only quibble with that a little bit because I always say the first 4 years don't really count. There wasn't enough liquidity, you couldn't really put real money in, and you're going from fractions of a penny to a couple bucks. But even if I take those away, in 11 of the 14 years that it's been in existence as an asset, it's been the best performing asset, including this year again. And over the whole period, and even if I take off the first 4 years and I say of the last decade, it's the best performing asset of all the assets. And you could put a meaningful amount in a decade ago, even if you couldn't, 14 years ago. And I think what people are really missing is over the whole period, right? The correlation to stocks is 0.15 and 0.0 to bonds. It is a perfect, diversifying asset. It's the best diversifying asset I've ever seen. It's better than bonds. It's better than international stocks. It's better than small cap. It's better than hedge funds. It's better than private. It's better than real estate. It's the best diversifying asset we've ever seen. And it's because it is dependent not on the traditional things that traditional assets are dependent on: economic growth, interest rates, fiscal policy, monetary policy. It's dependent on the tech. It's dependent on millennial adoption. It's dependent on regulatory regime. So it marches to a different drummer.